Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is December 20th. Today we're going to take a look at one out of the healthcare sector, Bristol Myers Squibb. Let's jump right in. If you want to know more about this company, check them out at www.bms.com. That is www.bms.com. That is their homepage. And they are a pharmaceutical company. We are a global biopharmaceutical company whose mission is to discover, develop, and deliver innovative medicines that help patients prevail over serious diseases. And that is their bread and butter, right? They're a pharmaceutical company that does research and development into drugs, manufactures, weight loss drugs, blood pressure drugs. I mean, any kind of drugs that you can, legal drugs we're talking about, right? Not the stuff you're buying on the corner if you're out there doing that, but legal drugs that you buy from a pharmaceutical company like a CVS, a Walgreens, or wherever you get your pharmaceuticals from. And if you are elderly or getting older, I'm on a couple of pharmaceutical drugs for high cholesterol. So it's for stuff like that, high cholesterol, like I said, blood pressure medicines. A lot of different medicines out there that people are on, especially if you are getting older and your parents or your grandparents are definitely on some sort of medication, I would be willing to bet. So again, check them out at www.bms.com if you want to know more about the company. And the reason we are taking a look at them, down 2.22% on the day. We are talking about Bristol Myers Squibb Company, ticker BMY, out of the healthcare sector. Closed out the day at $50.95. Looks like they're down a little bit more in the after hours. 52-week range, as low as $48.25, as high as $75.18. Definitely closer to their 52-week low than their 52-week high. Average volume of 13.7 million. Today's was 10.7. Pretty much a sell-off from start to finish. Looks like they tried to recover a couple times throughout the day, but overall, just a sell-off, down 2.22%. Market cap $103.676 billion, a beta of 0.33. So they are much less volatile than the overall market, actually. So a lot less volatile than the overall market, only about a third as volatile. So if you're looking for something in the healthcare sector not very volatile, this definitely fits that criteria. Price to earnings, PE ratio sitting at $12.93 per share. Earnings per share, EPS, sitting at $3.94 per share. Next earnings date coming up February 2nd. For dividend is $2.40. Divide by 4. They are a quarterly payer. We'll see that here in a little bit. They do have a very, very nice starting dividend yield at 4.61%. Ex-dividend date coming up January 4th. So if you were to buy them now, you would be in line for the next dividend payout. Looks like they're going to pay out on February 1st. And according to Yahoo Finance, they see a price target of $62.32 over the next year. So they see it going up from where it currently sits. Now, I like to get into statistics and see if the company is presenting any value according to dividend yield theory. To do that, you click on statistics, you go down to dividends and splits. You look at their 5-year dividend yield average, 3.13%, compare it to its current, 4.61. Same thing over here, forward annual dividend yield, it's the same number, 4.61. And since it is higher, it speaks to some undervaluation according to dividend yield theory. If this number was lower than their 5-year average, it would speak to overvaluation. So that is how you use dividend yield theory. They are inversely correlated. Again, since it is higher than their 5-year average, speaks to undervaluation. If this number was lower, it would speak to overvaluation. Now, they do have a pretty low payout ratio. I like 75% or lower. They're sitting at 57.87%, at least according to Yahoo Finance. And again, very, very nice starting dividend yield at 4.61%. Now, I like to get into the financials of a company. You do that by clicking on financials. We're going to look at free cash flow, but there's a lot of good information under financials. You're going to find their balance sheet, their income statement, their debt to equity ratios, assets over liabilities. What do their margins look like? Are they growing over time? What does their revenue look like? Is it growing over time? What does their debt look like? Are they paying down debt? Are they taking out more debt? Are they repurchasing their own shares, which you'd see here? For this, again, we're going to look at free cash flow. We want growing free cash flow over time because dividend companies typically pay out growing dividends if their free cash flow is growing, right? It also speaks to the health of the company, right? They have free cash flow to reinvest back into the business. They have free cash flow to make acquisitions, to pay down debt, to repurchase shares, and to pay out dividends. So it is good to see growing free cash flow. 2019, you can see here, $7.2 billion. Big jump up in 2020 to $13.2 billion. Another jump up in 2021 to $15.2 billion. a drop down in 2022, but some of that may be attributed to repurchase of capital shares. We'll look at that here in a minute. And it looks like to date in 2023, they're sitting at 11.6. So it looks like they're going to beat what they produced in 2022 overall from 2019 to date. Definitely seeing growing free cash flow. And not only do they have growing free cash flow, but they are repurchasing their own shares pretty aggressively. You can see 7.3 million here, 1.5 million here, 6.2 million here. And even though in 2022 it looks like there was a bit of a drop down from 2021, you can see they repurchased about 1.8 million more shares in 2022 than they did in 2021. So part of that drop can definitely be accounted for here. And they are continuing that trend so far in 2023 at 7.5 million repurchased shares as well. So very good numbers overall on this one, very close to its 52-week low. Definitely seeing growing free cash flow, definitely seeing a low payout ratio under my criteria of 75%, and a very, very nice starting dividend yield here. Now, I like to look at more than one source. I recommend you do the same. I like stockanalysis.com. You pick any sources that you like. This is just one that I like. They present information in a very user-friendly manner, and it gives me a back check to make sure the information I am getting is accurate and up to date. As you can see here, they updated this information last on November 15th. Price targets were last updated November 15th, so it's not that old, a little over a month old. And they have 17 stock analysts that have taken a look at this. They call it a consensus buy, though it is right there on the edge of a buy and a hold. And they have a low estimate of $50, and it's currently a little higher than their lowest estimate. So if it was to drop down 1.9% more, it would hit their lowest estimate. Average estimate of $64.65. That would be a 26.84% increase from where it currently sits. And if it happened to hit their high estimate of $85, that would be a 66.76% increase from where it currently sits. All the while, you could collect that 4.6% dividend yield. Now, I like to get into statistics here and look at return on equity and return on invested capital. I like 10% or better. So over here, we go to the ROE, return on equity, sitting at 26.80%, beats the 10% I'm looking for. Return on invested capital sitting at 12.47%, beats the 10% I'm looking for. So what this really tells you is this company is pretty efficiently reusing its capital, whether it's investing back into itself, making acquisitions, buying back shares. They are pretty efficient at using their capital that they're reinvesting. I also like to look at earnings per share growth. Over the next 5 years, I like 5% or better estimate. They're sitting at 15.77%, so over three times what I'm looking for. This is really the only negative I see on this one without getting too much in the deep dive, seeing what their debt's all about, seeing what their revenue is all about, though you want to look at those as well. So we are looking at this company on a high level, but this is really the only downside I'm seeing. They are estimating revenue growth to decrease by 1.56% over the next 5 years. Now let's take a look at dividend growth. We are seeing a 5.48% dividend growth, payout ratio at 60.91%. I think we saw 57% from Yahoo Finance. Just cut it in the middle, add the 2 and divide by 2. You'll get around 58%. So around 60% payout ratio. Again, still under the 75% that I am looking for. And nice dividend growth, 5.48%. They are a quarterly payer. They pay out in the February, May, August, November timeframe. And we went back to 2020. They were paying 49 cents. Raised it up in January 2022 to 54 cents. Raised it again in 2023 up to 57 cents. And it looks like they are raising it again in January 2024 up to 60 cents. So for those of you who would be paid out on February 1st, kudos to you. You are getting a little bit of a raise, a 5.48% dividend raise. Nice to see that they are growing that dividend. And again, that is why we want growing free cash flow, so that we can get growing dividends over time. This is the vested interest stock screener. This is how I look at a company on a high level. It's also how I set up the video. So it's exactly how we just walked through Bristol Myers Squibb. You can pause this and take a look at it. The only one that we didn't look at was price to book. I really used that for financial companies like banks, but you can use it for any company. Just don't use this 1 or lower number. For banks, that really works. A 1 is fair value, lower than 1 is undervalued, higher than 1 would be overvalued. That's really for banks. If you're going to use price to books for other companies, compare it to other companies in their sector. Take the company you're looking at, take 2 or 3 other companies in the same sector, and look at where their price to book lays, and then compare the 3 or 4 of them. Well, that is really it. That's Bristol Myers Squibbs. Let me know what you think down in the comment section below. Is it in your portfolio? Are you buying? Are you still waiting for more of a pullback? Do you have concerns around this company, or do you really like its future outlook? Would love to hear from you down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Help me grow this channel and get the word out. Join the vested interest community, building a community of dividend growth investors so we can share our experiences, stocks like this, help each other and encourage each other along the way on our journeys to financial freedom. Hopefully you are on your own journey as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Bristol Myers Squibb that you would like me to do a stock pick of the day video on, go ahead and drop it in the comment section and I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thank you for stopping by. Hope you're having a great holiday season, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks and can money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.